Oh, hello everyone. I hope you're all well. I hope you're being kind to yourself, being kind to your family and your friends, being kind to your beautiful dogs, your beautiful putty cats, your beautiful animals, and just being kind to strangers in this world just to make it a better place. Given that it's getting harder and harder every day, I hope everyone's well. I hope they haven't come down with this horrible virus, and I really hope everyone's seriously looking after themselves. Apparently vitamin C is a thing to have plenty of vitamin C, orange juice, oranges, and vitamin D. I'm actually taking vitamin D as well, so just for the immunity system, guys. So please do look after yourself, all my beautiful subscribers and everything else. So today I thought I'd do a market overview of the market. We've certainly seen a lot going on in cryptocurrency land as well as the fiat market, so thought I'd do that just to update everyone. Pretty much we'll start with the equity markets. Now we know that there's been trillions and trillions of dollars put in by the US government and the Fed, and the question is, where are they getting that money from? They keep obviously printing dollars and printing bonds. I'm hot today. It's hot and cold. I hope nothing. Anyway, I don't want to think about that. So the question is, where are they getting the money from to keep pumping up this economic system, and certainly pumping up equities? And equities have seen a big rally from the lows of 19,000. The Dow's about back to nearly 22,000, as you can see. The S&P is up to 25,840, which is surprising given that this economic doom and gloom about the virus and everything. But so what we've got is pretty much markets generally for the month of March. The Nasdaq Composite was down 10%. The S&P was down 12.5%. The Dow was down about 13%. Other markets, being emerging markets like Brazil, were down 29-30%. The Dutch market was down 10. The FTSE was down 13. The German DAX was down about 16. The CAC 17%. And interestingly enough, China was only down 4% and 6%, which I find quite hard to believe, I have to say. I did read something about China the other day, and a lot of people, myself included, I don't actually believe the stats that are coming out of China for the virus. Apparently, there was a report done about how many people were being cremated in Wuhan in terms of the funeral centres, and how many urns there were, and apparently a report said there was at least 50,000 cremations and urns. So I don't again believe those figures that are certainly coming out of China. I just don't believe them. And it's a shame, because honestly you think they'd be honest about this in times like this, certainly the government. It just reminds me that obviously they are a communist government, and they don't want to tell people the truth, which is not great. So please do be careful, everyone. That's all we can ask for. So if we look at basically the exchange traded funds, they haven't done very well either for the month. A lot of things haven't done very well. The exchange traded funds, the US was down 12%. Certainly the emerging market countries like Chile and Argentina and Mexico, they're all down quite a lot, anything from 19 to 30 odd percent. Europe looks like they were down around 18% in Europe, and certainly in the Middle East they were down roughly about 18 to 20%. So they haven't done very well either. Let's check out the sectors in terms of the equity market that got less hit or more hit. If we have a look at this, just year-to-date figures I'll look at here. Basically, energy, as we know, has been hit very hardly, and that's obviously oil's been hit quite hard. It's down at about $22 oil, or $20 overnight. Looks like it's going down to $15 oil, which is quite surprising. There's a lot of supply in oil at the moment. Communications were down 17% for the year to date, which is not too bad. Healthcare's done reasonably well, only down 12%. Industrials 27 odd percent, and we see financials down 31%. So if we have a look at this, you'll see that oil services have been hit quite a lot, 69% or so. It's surprising agriculture's gone down, because I do believe that food is the place to invest, and investing in food stocks, particularly on the major exchanges like the US, but certainly in Australia. I think food will go up even more and more, because there has been price inflation with food certainly for a long time. Clean energy did well, only down 12%. 21% I should say, the internet down 11%, and software down 9%. So there are places in the equity market where you can hide, I have to say, where the market hasn't come down as much as it could have potentially come down, that's for sure. If we look at, we go to another thing here. We do see that, small caps year to date have been down 16%. Growth is still up 6%. Value down 9%. High yield 5.5%. Low volatility is actually up. Momentum's up, which is surprising. And, if we go down further, what else we got here? Oh, we've got other small caps down there, which are all slightly down. So I really like this. This is QuakeFin, which is a great app. It's actually for free. I just love it. I came across it one day in my internet searches. So it's a fantastic app. I don't know why they don't charge for it. I don't want to say that too loudly, but it's an absolutely brilliant app, I have to say. So if we go to fixed income, and look, I'm really watching the yield curves globally, because if interest rates start rising, it's going to even be more pressure for the equity market and risk assets, okay? I do believe interest rates are purposely kept way too low. They don't reflect the true price inflation that is in the system, and it's been in the system for the last 20 years, okay? I believe that inflation is running anything from 10 to 15%, okay? So if we assume that gross domestic product is saying negative 3%, and we assume that inflation is 10%, just using the Taylor's rule, then, a 10-year bond rate should be something like 7%. Yes, I said it's 7%. Interest rates are just too low, and we know why, because they've been played with by the central banks, the Fed, with quantitative easing, putting so much money in the system and buying the long end of the curve as well as the short end of the curve, and also, central banks and federal, the Fed and what like, basically reducing interest rates to such ridiculous levels to keep, pump priming the economy, okay? And it's not actually working in the real economy. It doesn't actually generate jobs or anything, and that's what they need to focus on, things that actually generate jobs, not keep cutting interest rates that basically just, pump up the equity market for a very few people. So what we've got is interest rate curves have been steepening quite a lot, where the long end is actually selling off and the short end is being bought up. And that is a dangerous market, because it means that interest rates in the long end are going up, and that's what, equities are basically priced off, and, long-term funding is becoming more and more expensive, okay? So let me just have a glass of water, guys. So if we look at the Australian market, you've got, the long end going up by 30 basis points. And that's quite high over a low yield, okay? And the short end is going down by 26 basis points, okay? And we're seeing that everywhere, right? Even Brazil, this curve steepening going on. We're seeing it in Canada, and I've mentioned this before. Even in China. We're seeing it everywhere. Also places where they have really, really bad economic growth and real problems, for France particularly, yields are going up, okay? So keep aware of this. Yields are going up. In the long end, Germany, yields are going up. So yields are not going down, okay? In Greece, which is, a basket case, they've got a lot of problems. They're not going to be able to pay their debt. Yields are going up in the long end, right? And this is dangerous for all markets, okay? We see massive steepening of yield curves. Indonesia, yields are going up. We see the same story. Emerging market debt markets. Italy, yields have gone up a lot. Now, Italy is the one I keep repeating. This thing could really fall over. I don't believe in the euro. I think the euro could be seriously sold. And Italy has major debt. They've got major problems with the coronavirus. It's just getting higher and higher. We're nearly at 1 million people with it now. There's some talk that the Chinese created this. I don't know, but Jesus, gee whiz, I should say. If they did, and it's a blow to mankind, I tell you what, what can I say? I mean, completely madness. But anyway, so Italy's interest rates are going up, okay? And that shows a real problem in the debt markets, okay? Because the risk is rising in Italy, and also it means they can't fund their other debt unless they put their yields up, and investors will buy those yields, okay, at high levels, right? Italy could be the first one to fall over, as far as I'm concerned, in the bond market, because they can't pay their debt back to the European Central Bank, which is propping it up, okay? And Germany is the strongest in the European Central Bank, and I really believe that Germany is going to get sick of it, because the Germans are taxed very heavily, and they're actually fed up with supporting, the Latin type countries like Italy, Portugal, Spain, that, for example. Even in Japan, right? Japan's had very low interest rates for a long time, negative here, and now they're going positive. They're going up a lot. If you look at 16 basis points over 32 basis points, That is a massive move in interest rates, I can tell you right now. And this is the point. We've had inflation for a long time. Interest rates are going to do what they should do. They should be going up, not down. You know, the mechanism for money, the cost of money should be going up, not down. And the thing is, the market will go there regardless of what the Fed does, okay, or regardless of what the central banks do. And this is the precipitous for the equity market to fall even more, okay? I'm very bearish to the equity market, regardless of whether it's rallying now and whether it's going up. I'm selling the equity market. I'm ultra bearish, okay, because of everything else that's going on. If interest rates and corporate yields are going up in yield and prices are going down, the equity market should be going down as well. Same story in Portugal. You know, again, Portugal is just like Spain. It's just like Italy. Rates are going up, and it's a very, you know, the economy is terrible, okay? Unemployment's rising rampantly. So, you know, unemployment in Italy, the real figures are probably 30-odd%. Same in Portugal. There's so many people going for the same job, and they're not being shown in the data. I don't believe the unemployment rates that are being shown. I don't believe the inflation rate that's being shown. I don't believe the stats that have been coming out of all these countries for years, okay? I just don't believe it, because on the ground, when you talk to your friends, when you go to the shop and you buy things, you know, when you hear other information, you know, like for example, Hong Kong Bank, you know, raising their business rates, doubling them, and they're around 40%, you know something is going on, right? I know a lot of friends that are unemployed, they don't have any work, and they can be all different ages. They're not just my age, right? I've got a lot of friends that are all different ages, between 20 to 100, okay? And people are struggling to get work, you know. The unemployment stats in Australia at 5% are just garbology, okay? And I'd imagine in the US it's the same, right? Unemployment stats are not correct, and the inflation statistics are not correct. They're garbology. Now, if we have a situation, and I've always called this a situation of high inflation and high unemployment, right? Think about it. That happened in history. Where did it happen? In Germany, okay? 1929 to 1933, pre-Hitler. Hitler came in 1933, and this is where we're going. We're looking at a high yield environment, a high inflation environment, and high unemployment. It's very scary. Very scary. There's going to be a lot of people on the streets, and I'm sorry, guys, I have to be a bit negative about this, but I'm telling you the truth, okay? This is very frightening, what's going on. Yields are rising, and they should. And, you know, we've got a situation where we could have hyperinflation, okay, which is the worst kind of growth that you want. With high unemployment and hyperinflation, where hyperinflation is going through the roof, it's costing you more, and you don't have a job, it's going to be a shocker. Plus, with this virus, it's just going to be terrible. I don't even want to think about it, to be honest. All I know is you have to help people in that environment, and you know, I've got a couple of lodges here in my own house, okay, already. So Russia's rates are going up. Everyone's rates are starting to fly up, okay. Scary. Look at South Africa. Whoa, you know, 20-year rates. I mean, seriously, over 12%. Keep an eye on interest rates, because this will bring the equity market, not only because of the virus, but the equity market down. All the risk assets are rising, okay? The only one where rates are going down is the United Kingdom and the US. But, you know, they can't stay low forever, because every other market in the world, rates are going up, okay? Interest rates are going up, and so they should be going up, right? Even in Australia, 20-year and 30-year bond, they should be going up, because we are in a position in the real world, high inflation, right? The utilities gone up over the last 20 years. The cost of living is astronomical. Food's astronomical. Electricity, education, you know, all sorts of things. Taxes on the roads. I mean, 20 years ago, we never had taxes on the roads in Australia. Now we do. Okay? Scary stuff, man. Scary stuff, I have to say. And yield curves are steepening. If we look at corporate yield, again, the other side of the balance sheet, corporates can issue credit, or they can debt, or they can issue equities. You know, all spreads are rising, okay? All spreads are going up. If we look at the returns, the returns are negative for the month, okay? Negative, right? And these returns are going to get more negative because corporate spreads were too tight. They weren't reflecting the right level to borrow debt in the capital market, okay? So we're going to get a massive move in corporate debt. Look at the high yield CC, corporate debt, which doesn't have an investment grade, right? That is a big move, okay, in interest rates. Huge move. 569 basis points. It's 5.69%. Okay, emerging market debt is the same. This is very scary. Okay, so, and we know curves are steepening dramatically. Even tips are off 1%. Municipals are off 3%. High grade, everything's lower, and it's going to go lower. If we look at currencies over the month, been a lot of mixed currencies over the month, okay? We have seen US yen come down over the month. Down. New Zealand dollars been against the US is down 11%. Australian is down 12%. The euro is down 1.8% against the US dollar. Now, I do believe the euro will go lower. I think Europe's a basket case, more of a basket case than the US, to be perfectly honest with you. Terrible. And I don't think the euro is going to survive. I really honestly don't. It was the worst thing that could have happened in Europe, and it's just not going to survive. That's for sure. Okay. The British pound's down against the US dollar. Okay. And then we've got all the different, all the different currencies, right? This is all against US dollar. So the US dollar performed really well, but the Mexican peso has performed badly against the US dollar. Down 25%. Thai down 10%. Russian ruble down 26%. Imagine if you were sitting in these, right? Brazilian real, you've got deposits in Brazilian real, it's down 30%. That means you've lost 30% of your money if you're a Brazilian, okay? Terrible. Something's going to go on here. Something's going to happen. And you just don't want to be in the fiat market. Seriously, I'm not kidding. I've mentioned this before, the Baltic Dry Index, which is the shipping index. Year to date, it's down 40%, which means there's no shipping being done around the world, okay? None. Commodity Research Bureau Index, year to date, down 34%. Year to date, crude is down 7%. Massive decline. And it could go lower. Crude could go to $15. I think it's at $20 at the moment, right? Let's have a quick squeeze here. $20, right? Let's have a look at this. Crude is $22, right? Brent, and crude WTI is $20, 2024, right? Real problems here, man. Real problems. You don't want to be in those either. And they're all down, right? All down. Now gold, interestingly enough, gold keeps getting hit around that 1620 level, okay? 1620 on gold, and it's back down to 1587, which surprises me. Now, I do believe that soybeans, sugar, all the foods will eventually go up. That's my view, and I just don't think it's reflecting it properly. I think food is going to be in short supply, okay? Food, that's for sure, right? Soybeans for the month are up, 0.8, wheat's up 7%, gold's up 0.5, coal's up 0.9. But, food is the thing to buy as far as I'm concerned. That's a fact, right? Food. Now, we haven't seen any figures yet for growth domestic product, but I do believe gross domestic product is going to be bad. I don't believe, as I said, in the jobless rates. I think they're absolute garbology. They're not correct. These should be a lot higher. Honestly, I don't believe in the CPI figures. They're just incorrect. How can CPI, Consumer Price Index, be at 2% when we know on the ground for the last 20 years that our cost of living is killing us? It's getting worse and worse and worse, okay? If there's no production, if there's no growth in the economy, right, and there's no new jobs being created, I do not believe in these unemployment figures here. I just don't. So it doesn't bode very well for going forward, okay? So if we look at, if we have a quick look at cryptocurrency as well, the last month was a hard month, and, we know that, Bitcoin was down against the US dollar by 28%, Ethereum was down 42%, Tether was up 11.11. I don't believe in Tether either, because Tether, they have 77% of US dollars against Tether, okay? So technically speaking, Tether should be at 77 cents to the US dollar, not 1 for 1, okay? I don't hold Tether when I'm trading. I don't like it. I don't trade in Tether. I stick to US dollars, okay? Because if you know how much US dollars they support against Tether, it's only 77%, okay? And that's a fact. So technically, Tether should be 0.77 to the US dollar, not a buck, all right? That's a fact. XRP is down 27%, actually performed better against the US dollar than Ethereum or Bitcoin, which is interesting. Bitcoin Cash down 35%, BSV 35% down, Litecoin 36, EOS 40. I don't like EOS. I'm a seller of EOS, absolutely. I'm a buyer of Binance, down 37%. Tezos, which had a great run for this month, was down 43% against the US dollar, okay? Leo, interestingly enough, I think that is a part of Bitfinex, is up 8.86. I don't like ADA anymore, down 37%. They haven't done anything. They've got no clients, nothing. I'm very surprised with Monero that it has performed reasonably well, given it's a privacy stock. I don't like privacy stocks because in a land of regulation, these things are not going to be, they're not going to last. Also, Monero is associated with, all the different, horrible vices out there. So just on, for my integrity, I don't buy Monero anyway. I don't like it. Chainlink's down 47%. Tron's down 34%. Hubi is down, what do we got here? Down 30%. Now, interesting enough, stable coins, you have to remember, are not stable. There's a misnomer. The name is not correct. They're against the US dollar, or they're against the euro, or they're against something else, right? They actually go up and down wherever the US dollar goes or wherever the euro goes, okay? So you need to know that. Dash is down 28, and again, that has privacy. Stellar down 32. Ethereum Classic down 42%. This thing got up to $12 in the rally, right? Doesn't surprise me it's down. IOTA. Now, IOTA, I don't like IOTA. The fact that it was close to Ripple, XRP, at 15 cents, I cannot believe it. This is a scam as far as I'm concerned. It doesn't work. The system was down for a month. If you look at IOTA over the last 4 years, they've had nothing but trouble with their wallets, with their technology. I just don't believe in it, right? People lose their coins. This thing should be at zero as far as I'm concerned. Zero. This Maker, they had an attack, a malicious attack, and everyone nearly lost their coins. And I have no idea why that should be at $2.95 either. The market doesn't price things properly, right? This market there's too many amateurs in this market, and it doesn't price things properly, okay? VeChain, for example, down 47%. I mean, that's outrageous. VeChain has so many clients, right? And so many partnerships. And even a portion of VeChain is owned by KPMG, one of the biggest chartered accounting firms in the world, right? And yet, the crypto stupid market prices at 0.00308, and it's down 47%, right? Amazing, incredible. The market is just stupid, absolutely stupid. What can I say, man? What can I say? And this thing, I believe, is verging on a scam, okay? This thing. If you want to know more about that, I've done reviews on it. You either join my Patreon, and I'll put up a crypto review if you want it, or I can charge you for a review, $200 to $300 US, or you can get it a lot cheaper through my Patreon, because I'm offering, my Patreon is seriously cheap for what you get, man. You get so many benefits for being on Patreon, right? I put up crypto reviews if you've got a $45 Patreon or a $35 or $100. And normally my crypto reviews I was charging $200 to $300 US. On Patreon, you're only going to pay $35, $45, right? To save yourself getting scammed. There are so many coins in the market, right? So many, and 99% of them are scams, right? So save yourself, learn some information, $45 a month is not a lot of money, or $100, to get the quality of information that I know, right? I have to say, my experience, no one's going to have my experience. And what I know is I know a lot, and you learn a lot from me, right? This is just there's so much stuff in here that is just, garbage, right? And scammy. Now, if we go to CoinMarketCap, and by the way, Binance is going to buy them. Basically, they're paying 400 mil for this, right? There's a lot of different deals out there, right? Toilet paper token. Now, that's hilarious. Out of stock. That's pretty funny, hey? I got to laugh at that, right? But according to this, right, if this is right, there's 5,290 cryptocurrencies, right? So 98% of everything you buy is going to be a scam, right? So how can you, if the technology doesn't work, you got to understand the technology doesn't work. You can get scammed regardless of whether you've got it on a wallet that you think's safe. You think the Ledger Nano S is safe. Well, it's not. You think the laser's safe. It's not. You can still lose your money having the crypto on a wallet, right? You know that. There's so many scams out there, and that's the thing. You don't know what you don't know. You don't know, right? So you can still lose money if the technology is not right, and a bad actor can get into the system, or a bad hacker, right, or a malicious hacker. You can still lose your money. And this is my point. Out of the 5,290 cryptocurrencies, right, 99% are scams, and they won't be around, right? And yet people think they can invest in this market and not get any education, when this is this market of cryptocurrencies is the hardest market of all the markets, and you run the risk of 99% of the time losing your money without education, right? I invest in stuff that's going to last the course of time, right? It's going to last the course of time, and you need to get educated. And this is the time to get educated with the coronavirus and everything, honestly. And as I said, my Patreon memberships are really, really cheap. You're not going to get the quality of information and the knowledge from anyone the way you're going to get it from me, okay? And a matter of fact, eventually I'll be putting those prices up because, they are too cheap, for $45, you get an amazing Slack database. You get access to crypto reviews. You get access to exchange reviews. You get access to my first course. I mean, you get so much stuff, right? It's a joke. Like, really, an absolute joke. Sorry, I've been gardening today, so I've got twigs in my hair here. I don't know how I did that. So you got to learn, because I don't want you guys to lose money. Seriously, it's so easy to lose money in the crypto market. Even if it's bearish, you're going to lose money. But if you're invested in coins and tokens that are scams, man, and there's so many scams, watch out. So yeah, anyway, Binance has taken over CoinMarketCap, which I thought was very interesting. And let me just go into Slack and show you the story. Binance are incredible. They're just doing so much, right? They're doing so much, and they're a $1 billion business, Binance, right? They earn in revenue a year $1 billion, right? Binance is in one of my in my investment portfolio. It's very, very cheap, right? I'm not giving you financial advice because I'm not a financial advisor, okay? But this is education, right? Absolute education, right? So if you have a look, Binance is basically taken over. They're going to take over CoinMarketCap, and if we go into professional crypto, for example, and I look at a lot of stuff, okay? You can see all the deals that have been going on with all the different exchanges, right? Now we know that Circle acquired Polynex, but then Justin Sun from Tron acquired Polynex. Bitstamp acquisition of a Belgium investment place. And again, we've got all these different, acquisitions, mergers and acquisitions, okay? And, they're going on, and we'll find, the people that survive are going to be the big ones like Binance, right? People that actually survive. A lot of exchanges are going to go by the wayside, and that's a fact, okay? We do find that Binance has been on an acquisition spree, and it had last 9 firms last year, and they keep buying more and more, okay, which is a great story for Binance, okay. They're very, very clever operators, and the thing is, look, I know my stuff, right? I keep an eye on everything. My databases are updated live every day, constantly, okay. So Binance, basically, they've got more and more, more and more things to take over. They're a $1 billion business, okay? And these guys are going to get bigger. They're going into South Korea and everywhere, okay? So they have a lot, and they're doing more on the fiat side and everything else. They're huge, man, absolutely huge. So they are doing more and more and more. So they've done a lot of takeovers, and they continue to do more. And it's the big companies that generate revenue, as I said, in crypto land, and usability that are going to survive, okay? So when you think about being 5,290 coins, and 99% of them are scams, absolute scams, or no liquidity, and being delisted off the exchanges, that your chance of losing money is seriously, seriously high, honestly. And, if you don't get educated and really know your stuff, because a lot of people don't even look at the technology, right? And the pricing of where stuff is on the crypto market is just not correct. If you don't look at the fundamentals and whether the technology works and whether you test it and whether it has clients or not, right? Crypto will not last if it has no usability and no clients, right? And no revenue, and that's a fact. All right, guys, that's all I'm going to say for the day. That's enough of me ranting and raving. I love the word garbology, as you know, but please do be safe, guys. Honestly, this is a very scary time. Just be safe, look after yourself, look after your parents, value what you have in every way. I certainly do. People are very fragile. We all are, we could be here today, gone tomorrow, and, you've just got to love well and be kind as far as I'm concerned. Look after yourself and your family and your friends and your parents, and look after your beautiful animals, and just be really kind to people in the world. I mean, it's hard. This world's hard. It's hard for everyone. All right, guys? I mean, I generally care about people. So please do look after yourself. Thank you for listening, and I'll talk to you very soon. Thank you, Susie. And then I need to turn this thing off because I always struggle with this thing, turning it off, because I have 2 screens, and then it just doesn't work, and I have to stuff around like this. So let me try and do this again, because I've got 2 screens, and what happens is I can't see the mouse properly, so it's like white on white, and it's really hard to maneuver. Okay.